Thinking about flipping and just not sure how to enter into the market? Stay with us right here on Real Estate Talk Boston. Right now I'm joined by Bryan Joyce, Grand Coast Capital, one of our Boston Power players.
How are you?
Bryan, thanks for swinging by.
Sure thing.
With HGTV and all the shows out there we always talk about, it really kind of has pushed flipping to a new level.
Yeah.
It's not one of the easiest things to do, though, in regards to making money flipping properties.
No, it's not. I mean, it looks easy on TV, right? Everyone makes money. They go into it. They always seem to be right on it. They find their sales price. It's really not as easy as it sounds. So I think the reality is finding the right property and digging in, doing your own due diligence, having the right team together of agents, contractors, things like that. But at the end of the day, it is still a risk, but definitely not as easy as seen on TV. Yeah,
and it's almost a talent, right? And it's a talent you can own as you move along. A lot of times you have to lose to win,
right?
From what I understand. Let's talk about it from your side of the fence. So when it comes to the hard money financing, that term gets thrown around, hard money. Like, what does that actually mean?
Yeah, the hard money, it's a funny name. It sounds like it would make it hard to access, but it's actually easy access to funds. The hard money is typically with short-term lending, 6 to 12-month loans. The idea is ease of access to get the capital, because it's collateral-based lending. So we're digging into the value of the property. The borrower is secondary, right? So if you go to a bank for a loan, they're focused on the borrower as a primary source. Can the borrower cover the loan? Then they look at the property. For us, it's what's the property worth? Can they sell it for the price that they think they can? Are they going to make money? And really, that's our focus. So the ease is, we can close in a few weeks. We're not doing inspections. We're not doing appraisals. We're doing a quick underwrite of the borrower, and the rest is digging into the budget, comps, things like that.
So I'm coming from the residential lending side, and I think you bring up a great point. It is two completely different processes. We're qualifying the borrower. We're looking at debt-to-income ratios, credit score, income, assets, and the value of the property. You lead really with the property. If somebody's got bad credit, do you check credit, or does that not even come into play? Yeah,
we do check credit. I mean, and really our minimum is about 600. We can go below that for the right scenario, but again, back to the focus is the credit. We take the credit score, and that's a factor of pricing and risk for us. But we're not digging in. We realize people are coming to us. Maybe they have a divorce. Maybe they had a few missed mortgage payments. Our loan is maybe 6 to 12 months, so we're not thinking long term. We're just trying to make sure they have the funds to cover our loan for the next 12 months, basically.
And the key point is you're doing investments only.
Correct.
You're not doing primary residences.
Yeah, we're only licensed. We're not even licensed for residential. So we do the single-family homes, multifamilies, but no, we don't do owner-occupied properties.
And typically, hard money or investor lending, that is focused strictly on commercial or investment properties.
That's right. Yeah, right? We can lend on just about any property, so long as it is investment purpose, owned in an LLC or some other business entity, with a personal guarantee from the underlying borrower.
You typically hear that it differs from residential lending. Rates are much higher.
Yeah, we get a lot of people that hear our rates, which are inherently higher because it's short term, and they think, they say, I can go to a bank and get 6%, 5% on this investment property, which is true. But a lot of the properties that we're lending maybe can't qualify for financing due to condition. Maybe they're buying it at an auction and they have to close in 30 days. Traditional lending on your side generally can't close that fast, right?
Sure.
So where we come in is we could close within 5 days, get the deal done, and there's a cost to that, right? I mean,
there can be a game changer. A game changer for many to get the deal done.
Yeah, we have plenty of qualified borrowers, 800 credit, a lot of cash in the bank, a lot of experience, but they find coming to us it's just an easier path because it's all about getting into the property, fixing it up, and then turning it around fast. If they have to wait 60, 90 days for a closing, that seller, as we were talking earlier, the market's so hot, sellers don't want to wait 90 days. They'll take that offer for close in 2 weeks, right?
Sure, absolutely.
It might even take less money for a quick closing.
Typically, what kind of equity do you have to bring into the deal to get it done? You know, for residential, single units is typically 20, multi-units 25%, up to 4 units. What about on your end?
Sure. So for our kind of renovation loan that we've talked about, depending on borrower experience and the collateral itself, it could be as low as 10%, upwards of 25 if needed. 25% is a down payment. If we go off of total cost, so we take the purchase price plus the renovation, that total is the down payment's calculated off of that.
Okay.
So the more seasoned borrower, higher credit, they're going to have the lower down payment. The newer investor might be in the range of 20%. But one thing or two things that make us unique is, first, we allow second mortgages behind us. So a lot of borrowers will borrow their down payment from family, friends, other private investors. So they're getting into the deal for 100% financing, basically.
And that's not typical for the hard money lenders?
No, a lot of hard money lenders out there want, people to bring their own cash. Not to say there aren't others out there doing it, but we're on a national level, we're unique in that situation. We also allow borrowers to cross-collateralize against other real estate. So they might be, as the term, equity-rich, cash-poor right now. Maybe they've done 2 projects, they're on the market to sell. They have a few $100,000 coming to them in a few months, but right now they don't have that cash. So we can leverage those properties that are done to get them into the deal, and maybe they're just coming with the closing costs.
It's really,
we do those quite a bit.
Outside the box financing options. Joined right now by Bryan Joyce from Grand Coast Capital. You've talked about over the years some really funky deals. Can you share with us a scenario that's really outside the box? It might expand people's minds of investment opportunities.
Yeah, and where we've talked about the cross-collateralizing of real estate, borrowers that, again, might have some equity in other properties, but they don't have the cash right now. So we had a recent borrower, long-term borrower of ours. He owns a property that he just finished the renovations. It's on the market down in Sarasota, Florida. It's not selling right away, but his private lender that he has the loan with now wants the money back. And so he really wants to help the guy out. I think his sale price is around $250,000. He is looking for us to finance a pretty high amount, roughly 90–95%. So on a property that's been renovated, doesn't need, we're not adding value through renovations, we're kind of lending as is. We would normally be in the 75–85% range at the most. For him, he has multiple other properties, so we decided let's cross-collateralize against 3 others. We'll use the equity there, mitigates our risk on this one property in Sarasota. So we refinanced him at 95%, and he's very happy, and we're looking forward to doing more business with him now.
That's awesome, and typically, a local bank is going to run away or not even entertain something like that. So to be able to get that done is pretty cool. Because
if I recall, traditionally, you can't, in the traditional side, if the property's on the market, you can't refinance.
Can't touch it, correct.
For us, we want it on the market, right? We want to know, this thing's on the market, it's going to sell, it just might take some time. So we'll do that deal, and we pulled it off in about 7 to 10 days and, helped them out short term.
Cool stuff.
Yeah.
Thank you for coming by, Bryan.
Thank you.
And if you're looking to getting into flipping homes or have a deal that you want to put together or run it by Bryan, you can connect with him at grandcoastcapital.com. Yep. Remember, we have more hard money lending tips, real estate information right here on our page on boston.com.